All right, guys. Good morning to you. This is Tcbfx here. I want to be looking at the analysis for the week 35. We are now in week 35. Starting from tonight, we're going to be looking at the market to see what is going to be coming up. Now we have our normal pairs that we look at: GBP USD, Euro USD, and SP500 this week. We're going to look at them. And also probably we might look at USD Chef. I know in the comment section somebody was asking me to look into gold. I will do if I have the time, but I'm not sure I'm going to be able to do all of that today. So let's look at, firstly, want to look at GU. And now this is GU right here. So for those of you who are new to trading and you are just looking at this video right now, first thing you want to do for yourself is to hit the subscribe button and then go back to the previous videos I've done. Encourage yourself to watch them so that you'll be able to understand how we look at the markets every week. This is weekly forecast that we do. So we help traders, beginners traders, and even advanced traders to understand the direction of the pairs that we're looking to trade for the week, especially GBP USD, SP500, and Euro USD. So if you're trading any of these pairs, you want to be able to understand where the market is going for the week. And that's what we're looking at. And every week we look at the market that way. So you'll be able to get access to this video every time we upload. So hit the subscribe button, hit the bell notification, and you'll be able to get those details. All right, let's go. Now, this is the weekly candle. As you can see, the previous week was bullish. I told you guys that we're expecting the break of that high. If we break this high on the weekly, which the market already anticipated a breaking, which it did broke. Okay, we have that break. So we're going to go higher. And that's exactly what happened. So there are things I want to bring to your attention. As you can see that this high was broken. So we have this break of this high. The market took out this high wonderfully. And then we have the market now stretching within this area of price action. So this is weekly behavior. So we should be looking at that area, well, worst case scenario that price will get to in the future. But we know we're bullish. So I already told you that we're bullish over the past 3 weeks when price broke this high, that we're now getting to ride to the upside. Now, if you go to the daily, you observe a few things here that on the left, I'm going to just quickly shift to the left so you can see something here. We have few areas here that price will be interested in coming on the daily. Now, here's where price is at, okay? So firstly, we want price to break this high, okay? If price break that high, this is where price is at, this level, where this so we can adjust this header just to make it smoother. So now we will look at this area as well. Those are liquidity areas on the daily, so we can break into that. So in other words, if we can break above this level, this high, then we can be anticipating the trade within that level. So firstly, let's look at where prices are. So let's position this one properly on top of there. So this is where the price is at right now. So we're bullish, extremely bullish, right? So here's the direction I'm anticipating. First of all, on this daily candle, this particular daily candle, I'm going to measure that with my feed. That's the first thing you want to do because we are bullish. I'm looking at the direction. So I want you to just pay attention to what I'm about to share with you, which is very important on analyzing the market. Now, we all know that when the market opens, it opens here because it closed there. That's bullish. The market will open here. Now, there are two things that the market may do. Either it trade up and then create a new high with a wick and then retrace back down before it goes back up. So those are the two things you want to expect with this behavior. If the market want to go back up, you want to expect that. Now, if the market want to go bearish, now you will notice that it will close and then close below. So you will expect price to close below this to be able to go bearish. But I'm showing you where to expect price action. Okay. First of all, you want to see price break this high. I mean, push up and give you a new higher high. If it doesn't give you a new higher high, expect that the price is going to retrace for this week. So that's very important. You expect that the price now, if it doesn't give you a new higher high on the week, that means it opens and then it goes up and fails to break this high. Pay attention to this daily candle and it drops. It starts dropping. The first thing you want to do is let the price actually break below the 38, and then you cannot expect price to react to it. Either it react to 38, react to 50 or 30 or 61. If it's going to go bullish, then you will see a wick. It will create a wick again, rejecting back up. That happens. So you need to pay attention to that. But the only way we can start looking at the only way we can start looking for sell is when the candle create this candle and then it has a wick up there. That means it did not break the wick. That means create that candle without breaking the wick. I'm trying to make it big, so don't worry. Okay, never mind. So you understand what I'm trying to say. So it created a wick there and it fails to break the wick. If it fails to break the high of this high, so we know that we're going to have a retracement. All right. But expect the market to retrace, to come down and then reject at this level. Okay. That's what you're expecting. So that's number one. Number two, you go to the 4-hour time frame and expect price to retrace on the 4-hour. So I'm expecting price to retrace. So I'm expecting price to retrace. It might probably open up, retrace here. Okay. Retracing to this level and then rally up. So I'll look for that for first push up to buy. Okay, on the 4-hour time frame, because I know this candle that I just measured is the daily candle. So I'm expecting price to pull back into that order block, that secondary order block, which was created on the 4-hour. Then I'll rally up. But it's a buy market. The only way I'll be looking for sell is when price drop and break structure, break this low. That means close below that fib, and then I'll looking for sell. So, but at the moment we are bullish, and the only thing I'm waiting for is retracement on GU. So we want that retracement down there. Did you see how I watch this video again so you know how I mark this area? That's what you're gonna do, and wait for price to pull back. Now, if you keep rallying up, it's okay. If you keep rallying up, all you need to do is to go to a lower time frame and look at structures. For instance, if you keep rallying up, how would you know? You can't just stay on 4 hours there. You have to come to a lower time frame, like 1 hour, 30 minutes. You see what it's already doing, creating consolidation. So there's possibility that it could pull back into this level a little. That's the opportunity to get into the trade. It could pull back into this level a little. So you have to watch it on a lower time frame. As you can see, the lower I go on the time frame, you see, the more opportunity is clearer for me to wait for price to come into these areas. And then I'll look for buy. So this is exactly what I want to do. And then you just keep moving depending on the daily price action, depending on what price action is like. You just keep moving until we hit the highest level that we created on the weekly or daily time frame. If you check the daily time frame high, you see this level, we're targeting that high for the week. So that will give us a multiple of this is where price at, multiple of 200, 300 pips. That's 250 pips in a week. That's a great deal. And we're expecting price to get here on the weekly time frame. So we're still very, 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 very bullish. So let's get on with that. And that's how I'm going to trade GBP USD this week. So I'm going to be looking to trade that. And now SP500. Let's go to Euro USD first. Let's go to Euro USD. Euro USD have the same behavior. If you're to look at it from the weekly, they have the same behavior. We have a new strength coming out from Euro USD. Market has been consolidating for a long time, and now we have a breakup structure. So we expect this high first on the weekly. We expect this high to be broken first on the weekly, and then we can target the next high, which is this one here at this level price here. We can target that high, and then we can now anticipate that, okay, maybe price, we want to take up that high, and then we just keep going. But at the moment, this is where prices are. So remember that price came up here before and reject. So possibility that price will reject there might be strong. But let's look at it, because we see previous candle that trended to that area when it rejected was very bullish. You would have thought price should continue up, but what we saw is a climb down. So the market dropped massively and broke structure and started consolidating. So right here is doing the same thing, but very close, very, very close. Now, this time, the next candle will be the one to speak whether it's going to reject or break above it. So that's what you're waiting for. So if you go to the daily, we have this behavior here. Let's look closely to the left and see. Great. So we have this area of price action. So we're going to mark this area out on the daily. Okay. That's a good area to look at for price action. So if we check all the way back, there is nothing much to really, yeah, we have price action here as well. So we could look at this area here. Great. On our daily time frame. So let's go back. That's a good area to mark this week. So now let's go back to the main area of the price action. So here's what we're looking at. Two things involved here. Okay. Of course, we're not looking at if price come below this level, we're looking for sell. So that's the truth. They will be targeting this liquidity level. Okay. This is liquidity area on the daily. I mean, on the 4-hour time frame. So there's liquidity area that they may target, which is fine if they want to, but that's not what we're looking at now. We want price, okay, to bounce back into this key level if it does. Now, if it doesn't and it wants to push higher, then there is the chance that you will wait for a retracement. Every of this pair, you must wait for a retracement. Right now, you can't just jump in and keep pushing up. No, you wait for a retracement. That's the way you trade. Price has created a new higher high. So you wait for a pullback. There must be a pullback somewhere, and then you rally up. Now, with this in mind, what you do is you want to look at the 1-hour time frame, the 30 minutes time frame, and see what price is doing. For instance, we have on the 30 minutes, we have liquidity here. Okay, this is liquidity level. Okay, now we have liquidity there, price created liquidity level, and then we also have liquidity at the bottom on the 30 minutes time frame. So you want to pay attention to these liquidity levels. Okay, that's the way you look at it for retracement. Pay attention to liquidity levels like this. And there's another liquidity level on 15 minutes. If you go lower, that's liquidity on 15 minutes. You see this level? But I feel that is not an issue. They can take that out easily. So the major one is this bottom. So I'm expecting them to retrace on the lower time frame. So I'm expecting price to retrace on this Euro USD, take out liquidity before rallying. So this is where you're waiting for a buy trade. And a setup is very simple like this, by taking the fib and put it in up there and then expecting price to come into that area, interest, this key area. They will take out liquidity, smash down a little, and then all of these things, all of these points, this area, this fib, 38, 50, 62, 61 or 62, these are our point of interest. You want to look at buy within that area. So this become your buy zone. All right, this area become an area where you're looking for price action. Understand price action? So you'll be able to take your first target and then you want to buy and move to, depending on price action, you want to move to that level first or that level and just keep smashing to the upside. So remember, if price break above this level, you want to pull back into it and then you want to continue to the upside. And that's what we're looking to trade on Euro USD. Bullish, bullish, bullish all the way. Now let's look at another pair, which is SP500 quickly. Now SP500, we know that we've been bullish all the way. Now they just want to, they retraced after a lot of push up, they retraced. And then with this candle last week, I told you that we're going up, and you can tell that the market has been rallying for the past 2 weeks. So now the problem is that they came up to a setting high and they started creating price action rejection. So this area here is where they broke above. So they broke above the body. As you can see, price closed above the body. So the wick is great, but the body is important. So the body of the candle is important where price is trading above. So because of that, we'll go to the daily to look at where price, what price is created. So now the next area of interest on the daily is this body as well. So we need to see that price break that level before we look for opportunity to buy. Continue. Now, if you checked all the way to the left, there is no other price action that you need to, because that's the highest of the market of SP500 right now. So you go to the monthly time frame, that's the highest. So the best way to trade this is to look at psychological levels, major psychological levels, which is obviously telling you at the higher time frame, you can see that these are all areas of psychological level that are major. So the major one is this area here, which is 6,000. All right, we have that 6,000 there. And then we have other psychological level areas that you can pay attention to, which is 6,500. Or we can have 5,500. Okay, we're almost there. So you can always target the smaller psychological areas majorly. But on a daily, they will stretch from major psychological level to major psychological level. As you can see, what just happened here, this is about where we have 5,500 here, and we have price action break above that. So, and then the next thing is stretching all the way to that level. So you take the random numbers to help you out on that behavior. So that means a random number, if we're to go to the weekly time frame, random numbers will be, the next one will be 800. So we'll mark that out like 5,800. Okay, these are all psychological levels of targeting TPs. All right. And then 900, you get it. So you just mark that out. And I think there's one there, which is 700 right there. So let's put that to 700 right there. So great. So this is the way you want to mark it based on your TPs. Now let's go back to the 4-hour time frame to look at price action. So what you want is a retracement. So first of all, you want to see liquidity taking. So let me see if we can see it on the 1 hour. Yeah, we see on the 4-hour, you can see this as liquidity area. Okay, want to see that as liquidity area. So that's the first thing. But you see price is already using that as an area of interest. So you want to see that price break that area, take out that area off. All right, there is no holding. So what I'm expecting to do or trade on this is wait for another candle that push up, go up, and then reject and come back down. When it comes back down, that will might be my entry to the next target. So remember, we're bullish on this pair. We're only trading buys. So the question is, how do we get on it? It's very simple. Look for opportunity for liquidity taking. So as I can see now, I'm looking for that liquidity to be taken up, and then a pullback, and I'll buy. That's one. Another thing is I will look for liquidity to the downside on 15 minutes time frame. If there is, depending on the market will create that liquidity area for us, and then retrace back again. Retrace back into this area of liquidity. We can see much liquidity here that we can tap into, and we'll be able to get that price action there. So it depends on what the market does, because Asia session is about to open. When the Asia session open, there's going to be some liquidity be created as well. So you want a sweep to the downside and then continue. So that sweep is what will enable you to continue to the upside and then keep trading up. All right, keep trading up. So we're bullish, and I'm still going to be buying SP500. So do we still have more time? Let's quickly look at one more pair, which is USD chef. Now I've been trading this pair on a sell direction for a couple of weeks because of the behavior on the daily. So we've been bearish on the daily, and as you can see, price eventually break that level, and we're looking to the downside. It's still bearish. So the market is a sell. So that means that we just broke a new structure low, and then we intend to go lower. So let's see on the weekly if yes, on the weekly we have a target. So on the weekly, we have to target this low. So for the week, so you should be expecting to target this low for the week. So let's go back to the daily. So on the daily, what you're going to be trading in week 34, week 35 that we're in, is this area. You're going to be trading this area this week. So expect price to pull back up if you want. If it doesn't, they'll pull a pull back into this area, and then a continuation to the downside. So this is the target for the week that you have. But on the lower time frame, remember, this is just 4-hour time frame. So this is psychological level of 85,500. So you want price to pull back into that area, and then you can continue selling. So I'm looking for more sell. Very simple to look at that. If you go to the 4-hour time frame, you want to see something like this. All right. You see that area there. You want price to pull back into that area one more time, and then give you opportunity to sell. So I'm going to be looking at historically, I'm going to be looking at what price has done, and I'm targeting that area if I want to sell. And depending on the stop loss, I'll target that area. So 1 to 2 is not a bad idea. But remember, you're going to go to lower time frame to find a sniper entry based on market structure. So market structure will give you even a lower stop loss within this area. So you can easily mark that area as well as area of TP. So you know that liquidity has been taken there. So this is your stop loss area, and then you can have that reach for the week. That would be a beautiful trade if you're able to cash this week for catch this trade for the week. So I'm looking for sell on that. So I think those are the pairs I would like to take today, talk about today. I hope you guys enjoyed the section. Now watch the video again and again, so you'll be able to understand exactly what I've done this morning, so you'll be able to catch the move as the market is getting ready to trade. So hit the like button, hit the subscribe button if you're new to the website, to the site, to our YouTube channel, and to this whole trading game. It's exciting. So yeah, there's much more to learn. So happy trading, guys, and I'll see you in the next one, which is going to be on week 36. Until then, enjoy trading. Bye for now, guys.